We've got another interesting list for you today. Remember when we all had to make the shift to working from home when the COVID-19 pandemic hit? I remember having 2 offices, meetings with clients, and meeting with investment fund managers in nice restaurants. Well, that shift also had significant impact on the stock market and the real estate sector too. In March of 2020, the S&P decreased by 12.4%, but the US REIT sector also dropped by almost double of that, by 22.1%. As a result of the pandemic, offices were closed to stop the virus's spread, leading to a mass shift to remote work. However, with the pandemic improving, top companies like Apple, Amazon, and Goldman Sachs have now implemented a widespread return to office or RTO mandates for their staff, either on a full-time or hybrid basis. It is important to note that a full-scale return to office trend has yet to materialize. According to Placer.ai, a foot traffic analytics company, office occupancy nationwide was only at 60% of pre-pandemic levels during the Q3 and Q4 of 2022, and this level remained steady throughout January 2023. Given the current macro environment of high interest rates and the increased acceptance of remote or hybrid work, office-focused REITs may still face difficulties. Nevertheless, there are some indications of an increase in office visits in certain bustling areas. For instance, unique office visitors in New York had reached 86% of pre-pandemic levels as of January 2023. Other metropolitan areas such as Washington, Denver, Chicago, and San Francisco still lag behind. Given the discrepancy in RTO trends across regions and the ongoing appeal of hybrid work arrangements for many employees, it is possible that REITs have yet to fully price in an RTO scenario. If a nationwide RTO trend were to materialize, bringing occupancy levels close to or on par with pre-pandemic levels, certain REITs may experience substantial growth in earnings, share price, and dividends. Here are 6 REITs that are well positioned to benefit from a strong RTO trend. As usual, we'll be working our way from the lowest yielding to the highest yielding stock. And today's highest yielding stock pays a 9.5% dividend yield. So stay tuned to the end to hear the full list. First on our list, we have Alexandria Real Estate Equities Inc., ticker symbol ARE. Alexandria Real Estate is a well-established office REIT with a market cap of $27 billion and a place in the S&P 500 index. The company owns, leases, operates, and develops over 49.7 million square feet of space in major cities throughout North America. Alexandria Real Estate mainly attracts tenants from the pharmaceutical and technology sectors, with some notable companies including Uber Technologies, Bristol Myers Squibb, Eli Lilly, Moderna, and Meta. Alexandria Real Estate is one of the few specialized real estate investment trusts that exclusively focuses on life science and technology properties, with its portfolio of strategically located properties in key clusters across the United States, such as San Francisco Bay Area, San Diego, and Greater Boston area. The company has emerged as a top player in this niche market. In its fourth quarter 2022 earnings report, ARE declared a dividend of $1.21 per share. Currently, Alexandria Real Estate Equities Inc. has a 3.38% dividend yield. Their upcoming earnings for the first quarter of 2023 is April 24th. Next on our list, we have Federal Realty Investment Trust, ticker symbol FRT. According to a senior economist at Moody's Analytics, the return to office trend could benefit not only office REITs, but also retail REITs with a strong presence in central business districts like FRT does. I remember when I was at the office, the almost 2 occasional lunch out with coworkers or building buddies. With employees returning to the office, the tenants of retail REITs such as restaurants, grocery stores, and coffee shop can expect an increase in foot traffic. Federal Realty Investment Trust, which was founded in 1962, was one of the first REITs to focus exclusively on high-quality retail properties, and over the years, it has built a reputation as a leader in the industry. Currently, FRT has a significant presence in commercial districts, primarily in major coastal markets on both the east and west coasts. FRT recently exceeded analyst expectations for its fourth quarter 2022 revenue, operating income growth, and funds from operations. FRT currently has a dividend yield of 4.07%. Their upcoming earnings for the first quarter of 2023 is May 3rd. Next on our list, we have Kilroy Realty Corp, ticker symbol KRC. Investors seeking to benefit from the surge in RTO mandates from major tech companies such as Apple, Microsoft, Alphabet, otherwise known as Google, and Tesla can consider investing in REITs with a West Coast focus. Kilroy Realty Corp is a great example, with Class A office properties in San Diego, Los Angeles, San Francisco, and Seattle. KRC has provided guidance for 2023, noting that it expects occupancy to decline to an average of 86.5% to 88% due to developments that could impact occupancy, including Amazon moving out of Seattle. However, KRC's new property in Austin, Texas is already 71% leased, and its overall portfolio was 92.9% leased at the end of 2022, despite the impacts of COVID. The company currently pays a dividend yield of 5.7%, and their upcoming earnings for the first quarter of 2023 is April 26th. We're just about halfway through the list with the next three names paying over 5%, so stay tuned. Next on our list, we have Boston Properties Inc., ticker symbol BXP. Boston Properties has established a strong reputation in the market as one of the leading office REITs, with properties spread across major metropolitan areas in the US, including New York, Los Angeles, and San Francisco. BXP prides itself in offering premier workplaces to its tenants with a portfolio comprising of 194 properties covering 54.1 million square feet of space. With an average lease term of 7.7 years, Boston Properties enjoys stable revenues in excess of 5.7 million square feet in leases and generates funds from its operations of $1.2 billion in 2022. Currently, Boston Properties pays a 6.02% dividend yield. Their upcoming earnings for the first quarter of 2023 is May 1st. Next on our list, we have Vornado Realty Trust, ticker symbol VNO. Now, Vornado Realty Trust could be an interesting choice for mid-cap REIT investors given its market cap of $4 billion. This REIT has a 5-year monthly beta of 1.3. Now, 1 is the same as being the same level of risk as the market, making Vornado Realty Trust a fairly volatile investment, despite taking massive losses of 40.5% and 46.7% in 2020 and 2022 respectively due to COVID-19 and rising interest rates. Investors seeking a REIT with both office and retail holdings in major metropolitan areas like New York City, Chicago, and San Francisco, VNO might be an appealing choice. In Manhattan alone, VNO manages 62 office properties totaling 19.9 million square feet and 2.6 million square feet of retail space. Additionally, VNO offers a high dividend yield of 7.65%. Their upcoming earnings for the first quarter of 2023 is May 1st. And last on our list, paying the highest dividend yield today is SL Green Realty Corp, ticker symbol SLG. Investors looking to capitalize on a rebound in the New York City office market may want to consider SL Green Realty Corp. As the largest commercial landlord in Manhattan, the REIT holds interest in 61 buildings encompassing 33.1 million square feet of leasable space in the key Manhattan submarkets like Times Square, Midtown West, Grand Central, and Penn Station. The pandemic took a toll on SLG, and it was further affected by rising interest rates and inflation in 2022. SLG reported a net loss per share of $1.01 and funds from operations of $1.47 per share in its fourth quarter 2022 results, down from $1.52 in the previous year's quarter. Nonetheless, investors may want to lock in a low yield to cost, which is a metric that divides a stock's dividend by its initial purchase price. Currently, SLG pays a dividend yield of 9.5%. Their upcoming earnings for the first quarter of 2023 is April 19th. I hope you enjoyed this list of the top REITs to consider for the return to office trend. Be sure to see our playlist of the top dividend-paying stocks for more investment inspiration.